Well, team, very excited to be back here with Grant Stevens. It's that time of the month where we're going to go through and answer a few questions that we've received recently from our audience. So, Grant, we've got Cheryl here from Northcote asking, will Afterpay or personal loans hurt my application?
Yeah, they can do. Not on their own, but sometimes when they're built up in combination, lenders might look at that a little bit adversely, thinking, yeah, these guys have got a bit of a temptation to go and grab themselves some credit when it's on offer. So you don't want too much of that stuff, but on their own, they're okay.
Yeah, nice. Okay. Now, next up, we have David from Palmy North. He said, what is the minimum income needed for a mortgage?
Well, it depends how much mortgage you want. If you want a really big mortgage, you need a pretty big income.
Yes.
If you're looking for something small, you might not need as much, but you do need to meet the minimum benchmarks. So there's going to be some expenses allocated to you, and you need to show enough to cover those and your increased mortgage repayments that are coming up.
Next up, we have Eric from Ellerslie. What happens when my fixed rate ends?
Oh, Eric. Yeah, I think I've seen him around actually. He's a good dude. Thank you for getting in touch, Eric. Great to hear from you again. Look, Eric, when your fixed rate ends, you've got two options. You can let it go onto a floating interest rate, which not many people do, but it does happen from time to time, or you can refix. You can refix at the rates that are on offer at the time. The banks all give you the option to fix that in advance of that fixed rate expiring.
Nice.
So generally up to two months, 60 days. Some banks are a bit shorter,
Yes.
but that just gives you the ability to lock in your rate before the rate expires, just in case those rates are expected to go up.
Nice. So when my fixed rate ends, okay, do you get a discount with your fixed rates going through a mortgage broker?
You can do. It's not huge, but sometimes we can get a small discount. But what we do really well is make sure that you make the right choices so that it's set up correctly for you.
Nice. Oh, now this is a good question. We get this a lot. Div from Margate said, what is an offset or revolving credit mortgage?
Basically what they are is they are products that are going to help you save interest. They are a little bit hard to visualize and understand. So that's a longer discussion, but essentially what you can do is use cash that you might have available to minimize your repayments by reducing your mortgage.
Nice, fantastic. Now we have V from Papatoi. Great question again, another common one. I'm currently self-employed. Can I get pre-approved?
Absolutely, yeah.
Okay, cool.
Yeah, the banks have got lots of self-employed customers. It's a bit more backwards looking, so it's a bit more of how you've performed in the past rather than what you're currently earning right now.
Okay.
But yeah, absolutely. If you're a self-employed person, you're making some money, you can get a mortgage.
Nice. And similar to this question from Sophie from Northcote, she said, I've currently got a student loan. Am I able to get pre-approval?
Absolutely, you can. Student loans do get factored into the affordability equation. If you have a large student loan and you don't have the means to pay that off in the short term,
Yes.
then we would just include your repayments from that student loan. But if you're very close to paying it off, we might be able to improve your serviceability by saying that you pay that off as a condition of approval, which can make a massive difference on what you can borrow.
Oh, fantastic. Mark from Mount Albert said, what is this Hello Home Pathway?
Hello Home Pathway is it is a platform built specifically for first home buyers. It's a video content platform where they can work their way through and have a good understanding after watching what's involved in the process. There's a lot of content there. There's 40 to 50 videos, so you don't want to watch it all in one pop. But as you work through your home buying process for the first time, these videos are there to help educate you around what to expect and what you need to prepare for as you go through each stage of the process.
Nice. So basically the Helloyello Home Pathway is a free video series which you can access, 40 to 50 videos, and help you guide you through the process from the beginning to place an offer, your deposit sources, and getting a loan for the bank.
Absolutely. And what I would say is that it's not there specifically to just rely on. It is there as a additional supplementary support. Definitely work with your advisor,
Yes.
but sometimes it's good to have your own content that you can access in between those advisor discussions.
Yeah, fantastic. Because I'm sure everyone's personal situation is a little bit different, and you can't really put that into a 40
No,
to
everyone's
50
the
video
same.
series. Everyone's the same? Okay, cool. Now we have Sophie G from Pukano. Are you hiring? Oh, hello, Sophie.
Are we hiring? We're always open to bringing on board the right person. Helloyello is an ambitious startup company that wants to be a big player in the mortgage space. So yeah, if the right person comes along and they want to get themselves immersed in the mortgage industry, we're open for discussions.
Fantastic. Rach Craig from Wellington said, who is the biggest eater in the office?
Well, that would easily be Xavier.
Nice.
Xavier is our new marketing assistant, and he is living in the gym, and he is feeding off carbs, and he measures out his oil. So look, he's eating a lot more fish and chicken than you and I, so he comfortably gets the title.
Fantastic. Now we have John from East Auckland. Why are banks declining good people?
Well, you can get declined as a good person. You can be with the same bank for 20 or 30 years and feel like the bank owes you something. And unfortunately, it doesn't really work like that these days. It's all done in the now. So if on paper right now, you're a good person, but on paper financially, you may not be, then you might not get approved. So you need to make sure that your finances are in order, that you have clean account conduct, you have a good deposit, and you have a solid income. And then you're at the start line to get a mortgage.
Okay. Now, Grant, this has been a great little chit chat. Now, lastly, our last question we have from Caitlin in Point Chev. Why do banks say I can't afford a mortgage when I've never missed a rent payment?
Yeah, great question, and well done for never missing a rent payment, Caitlin. That's a admirable thing to have on your profile, but unfortunately, you have to prove from the start that you have good credit quality, and that's just by not missing payments. But also, you have to demonstrate that you can afford the step up in mortgage repayments. Generally, most of the time, your mortgage is going to be more than your rent, so it's an uplift in your outgoings, and therefore on paper you have to demonstrate you can afford that. So yeah, keep up the good work, but it is an increase in outgoings, so you just need to be prepared for that.
Yeah, fantastic. Hey, thanks, Grant, and hey, good luck, Caitlin. So thanks very much, team. That's another round of questions there with Grant Stevens this month. Look forward to next month, and any questions you do have, don't hesitate to send them on through.